right, guys, we should be live. Just gonna double check everything, make sure that the chat is up and running, that the audio is good. We have a lot to talk about. We obviously have earnings coming that just came out. We have the offering. We are getting news by the minute. I'm just setting up this stream, and I all of a sudden also have marketing materials out for the offering, which I'll go over. We got an announcement of even more installations at Kia. So a lot to go over. If any other news comes out while I'm putting together this stream, definitely put it in watching the chat just to see what's going on. By the way, I do have in the chat, I have subscriber only mode on. So just, felt like it would be kind of fair to those who have been supporting the channel, be the ones that ask questions. So if you aren't already subscribed, you can go ahead and subscribe right now. By the way, if somebody could just let me know in the chat if the audio is good, if everything's working, just so I can make sure that you guys are all seeing this. And then I'll jump into what I have in front of me now, which is kind of a spreadsheet that I've put together. Let me see. Looks like we're good. Yeah, so I'm just going to keep going. But yeah, if you guys have any questions, any topics that you guys want me to cover, anything like that, put those in the chat. Sweet. Okay, thank you, Enki, if I'm pronouncing that correctly. So I'm going to jump right into it here. This is what we're seeing right here in front of me is a spreadsheet that I've put together for the earnings. And what I've done is I'm kind of looking at a quarter over quarter analysis here. I know generally in the earnings, we'll see kind of a year over year comparison, but I think with a company as young or as early in the sales process as Patriot One, it's kind of important to really go over the quarter over quarter analysis because the company is growing so fast that it really isn't relevant to compare last year when they really weren't in full ramp of sales and things like that. So I want to look at a quarter over quarter comparison, and I have kind of some notes set up here. So just want to kind of go over this for a second. Again, if you have any topics that I want to cover, I know news is coming out by the second here. Have some things that I haven't even taken a look at yet, and we'll kind of look at together here. But just to go over the earnings here first. What I have here is Q1 2022 on the left and Q2, the earnings that we just got on the right, and then this is the quarter over quarter change. Let me see, I'll make this a little bit bigger so you guys can see it. Let's see if I can zoom in here. Okay, I'll go one more. Okay, so just for the backlog, and this was kind of an interesting one here because if you guys remember, we got this this slide here in the corporate presentation, and just to kind of get this out of the way so that you guys can see. Yeah, so we have March 2021 compared to January 2022, which is when the quarter ended. And we have a $5.8 million backlog, and you guys might not be able to see this, but I went over this in a video that I reviewed, is this section down here where it says 2.1 million of the current backlog is pending successful trial. Well, in the earnings report, and that would be a $5.8 million total backlog. So if we go to the earnings, actually, let me go to the actual report itself. Here, let me close this door here. In the earnings, it actually says that there is an additional 1.2 million in signed agreements that are pending successful pilots, which I am curious as to where the extra 900,000 went, because I think this report was probably put together. This says January 31st, 2022. That presentation that they did said January of 2022 as well. So that was kind of interesting. It might be extract because this says specifically 1.2 million in additional pending for the platform backlog. So it could be extract. There could be some other things going on, but that's something I'm curious. I'll probably ask Peter about that in case you guys didn't watch my previous video. I do have an interview set up with Peter for next week. So should get a lot of context. It'll be nice because we got so much news that's come out. We got the offering, the earnings. Like I said, something to do with Kia that I haven't even looked at yet. So we'll look at that on the stream here. And it'll be nice to really kind of get some context around that. But that was one of the things that I saw. But if we look at back to that chart here, this shows the quarter over quarter change as a percentage from Q1 to Q2. And for just what we have in the backlog right now, we have a 21% increase quarter over quarter for platform sales. We have extract increasing 12% quarter over quarter. And we also have the total backlog increasing 15%. Now, what I've done, I put a note here and said with the 1.2 million in signed agreements that have not been finalized, then the platform backlog would actually have increased 140% quarter over quarter, which obviously is pretty huge. You know, if they were able to increase quarter over quarter at over 100% rate, that would be phenomenal. And that would put the overall backlog change quarter over quarter at 55%. So without that, doesn't look too great. I mean, still 21% quarter over quarter for the platform sales. I mean, if they were to do that annualized, that's, you know, almost 100% growth on an annual basis there, which is still great. But with those 1.2 million in signed agreements, that is definitely something that is pretty huge. And so one of the things that I'm planning on asking Peter, and again, if you guys have any questions that you would like me to ask Peter, ask him for clarification on anything, you can either put it in the comments of the last video, or if you're not in my Discord server, you can join my Discord server. We have a channel specifically just set up for Patriot One, so just throw those questions in there as well, and I'll try to get as many answered as possible. But this is kind of the main thing here that we got from this earnings report. A lot of this was kind of pre-released with that corporate presentation. Just to look at revenue here, and some of these are estimates. I'll kind of go over here, but revenue for platform revenue up 22%, extract revenue up 82%. Now extract revenue kind of comes in chunks, so you know, take from that what you will. Total increase of revenue up 66%. So all of those are good. Now this is where we really get into why they're raising money here. Anders, thanks for the chat about Kia. I have that open. I haven't looked at it yet, but I'll definitely get to it. And this though is where this is why they're gonna have to raise money. And this is kind of common for newer companies. When you see startups, a lot of times in the early innings, the cost of revenue or the growth of the cost of revenue outpaces the actual revenue itself. And the main reason for that is companies don't want to miss out on the momentum they have. They try to hire as many sales. They try to spend as much money as they need to, and maybe even a little more if that growth is increasing, like we're seeing with Patriot One, in order to take advantage of all of the momentum that they have, all of the demand. And they don't want to miss out on any opportunities there. They're expecting more growth, and so they're wanting to hire. And because of that, the hiring and the marketing spend and all of the rest of that, those costs, right? You can see here the cost of revenue, right? 139% increase for platform specifically, and 127%. Now, let me preface this by saying the cost of revenue in here is my estimates of the cost of revenue, because Patriot One doesn't actually break this out, which is unfortunate, but just what we get at the moment. But what I'm doing here, just to give you guys some insights, is I'm looking at their expenses here. And for cost of revenue, I'm taking sales and marketing, and I'm taking hardware. And for specifically the platform, what I've done, I think almost all, if not all, of the hardware costs are related specifically to platform, to MSG and maybe VRS. And I would say that probably most of the sales and marketing, I just estimated 3/4 of the sales and marketing costs are specifically for platform sales. And so what I've done in this spreadsheet is essentially taken these costs down here for the quarter, and I've allocated to cost of revenue 75% of sales and marketing and all of hardware to platform cost of revenue. Excuse me. And about 25% of that sales to extract. So you can see extract, from my estimates, is actually pretty profitable from what you could say is maybe like an EBITDA basis right now, because well, even less than that from a gross profit standpoint, because not taking into account personnel and stuff like that. But you can see here, obviously margins are negative, and they're getting increasingly so negative for platform, and that's what I'm kind of trying to show here. You can see that the cost of revenue is growing at 139% for platform by my estimates, whereas the revenue is only growing by 22%. Obviously, if that continues, there's no way for them to actually bring in enough revenue to offset their costs, because the costs are going to continue, at least in the short term, to outpace their revenue. And that's kind of just what I'm seeing right now. And I think the main reason why they're having to actually raise that capital. Now, the rest of the stuff in here are just kind of numbers that I've filled in, not necessarily kind of important to go over. But just to jump into the sale here, we actually just got this, I don't know, 20 minutes ago while I was setting this stream up. We got an updated offering of units or marketing materials. They kind of, where is it? Right here in the documents. You guys can't see it, but they listed as marketing materials. You guys can go to the website if you want to and check this out and kind of look at it on your own. But this is kind of a little bit more in-depth as far as what the units actually are. And there's a couple main points that I want to go over with the capital raise. First, we saw this coming, right? I mean, there was really a very minimal chance, if any, that they weren't actually going to have to raise any capital. So it's kind of surprising a little bit to see the stock drop so much when we kind of knew this was going to happen. Maybe some of it's due to earnings. I put a Twitter poll out, some of you guys may have seen that, asking kind of if anybody had sold, why did they sell? And actually pull this up here. I was looking at Kia for a second, but if I go to home, let's see, to profile, let's see what the poll's at right now. So you can see, only 13 votes. So, can't take too much from this, but there is still a decent amount saying, or some saying that it was earnings related. So that could be contributing to some of the sales, could just be some of the earnings there. But I think most of the sales is from the offering, which again, to me, kind of doesn't make too much sense because we saw this coming. We knew this was going to happen. But anyway, it is what it is. The next main point that I want to talk about here is these are units. So the dilution, right? If you think about diluting 10 million out of what the current market cap is, I'll have to take a look at what Patriot One closed at. I think the Canadian closed around 100 million market cap. Let's just double check here. Somebody can put it in the chat. let's see what we got. Patriot One closed at a market cap of 107 million or so. So some people were kind of doing the math on that and saying, well, about 10 million, that's a little over, or actually a little less than 10% of the current company, right? So we have about 10% dilution, but that's not actually quite right, because if you look at, let me go back, make sure I'm not missing any chats. Doesn't look like it. Okay. If you look at this, these marketing materials here, right? These are units. These aren't shares. So we have to look at what each unit actually contains. Let me make this just a little bigger for you guys. So you can see here, what they're issuing, right, is units on a best effort basis, meaning just the issuer, which is Echelon Wealth Management, I think. It just does their best to get the best price possible, right? Makes sense. But you can see here, right in this section here, each unit is comprised of one common share and a certain amount, which they don't disclose, which is kind of odd, but I think they're going to actually, after these marketing materials, sometime maybe later today or tomorrow, they should be adding to, or they should be filing a supplement prospectus, I believe is what it's called. And that should have even more specifics of what we're seeing from these marketing materials. So it should give us the number of common share warrants and things like that, and maybe even the price. The price may not be given in that prospectus, because if it's just trying to get the best price possible, they don't know what it is. It's almost like a market price, right? If you're placing a market order for a stock, you don't quite know exactly what the share, the purchase price is going to be. But the main thing here is each unit is comprised of one share as well as a certain amount of warrants. So if you think about that, that means that the 10 million is not actually going to be the full, we won't be diluted specifically by 10 million, because some of that 10 million will go towards purchase income exercisable, right? Then we could see dilution later on down the road, but the dilution will be at a higher price of whatever the exercise price or the strike price of the warrants is, right? If you guys are familiar with warrants, they're kind of like options. And so, for example, if you buy, let's say, Patriot One, right, for the US, let's see what it's trading at. US, it was like 43 cents, 42 cents. So if it's at 42 cents right now, the warrant might be expiring 1 year from now at an exercise price of 60 cents or 70 cents, something like that, right? And so what that means is the 10 million won't actually be diluted down, that entire 10 million. Some of that 10 million goes towards purchasing those warrants, which then could be exercised later at a higher share price, okay? So when you think about it, it's not fully diluting 10 million. It just depends on how many of those warrants, which hopefully we get in the filing, are included in each unit, and at what strike price those warrants are exercisable at, and how far into the future. But generally what that means with warrants is, in order for it to actually have a dilutive effect, it can only have that effect at a higher share price, which is kind of the benefit of a warrant. In order for the warrant holder or warrant purchaser to actually benefit, the stock price has to go up. So I just wanted to clarify that, because I think a lot of people were kind of misunderstanding that. The other thing that's a good thing, is this is only 10 million, right? They have a base shelf prospectus of 50 million, I believe. So to see them only using 20% of that, that's definitely a good thing as well. Now, obviously, it doesn't mean that they won't go on further to use the rest of that 40 million down the road, but at least at the moment, they're not looking at what they have in front of them with what they know about the company and going, hey, we need to raise the entire 50 million right now or we're not going to survive, right? This to me means, hey, let's raise what we need maybe for the next year, for the next 3 quarters, whatever it is, right? And then later on down the road, I think we're going to be in a better position, and we'll have more contracts and we'll have more to offer, so we can raise money at a higher valuation, right? That's kind of what I'm getting from this. Because if they didn't think they were going to be able to get a higher valuation later on down the road, you might as well just raise the whole 50 million now. Take as much as you can. But if they're only raising 10 million, one means they probably don't, at least in the short term, need all of the 50 million, which is obviously a good thing. But it also means that they probably think that later on down the road, they can actually raise that money at a higher valuation, right? At a higher share price, or even go and try to get convertible debt that might not actually, kind of in the same way as warrants, right? It'll have a dilutive effect, but even further on down the road and even at a higher share price, kind of like the warrants are. So that is kind of what I wanted to go over here. The other thing, last thing on the, and again, if you guys want me to cover anything else or think there's anything that I'm missing, questions, definitely leave those in the chat. The other main thing that I want to go over here that might have been kind of confusing, it took me a few reads to really get, is the where is it? The commissions. Is it not in this one? Okay, here it is. So the commissions here, it says the company, which is Patriot One, will pay the agents, which is Echelon Wealth Management, again, I think it is, a 7% commission on the aggregate proceeds, which in this case is probably going to be about $10 million, right? With, I think there's an option to increase that by about 15%. So roughly 10 million, maybe a little over 10 million. Patriot One is going to pay Echelon for facilitating this offering a 7% commission. Now, the good thing is, because that would basically mean that Patriot One is really only raising about 9.3 million, because they're having to pay 0.7 million or 700,000 to the agent, Echelon Wealth Management. But it says down here later on that the company may provide an agent a list of subscribers to the offering, which will constitute a president's list, and the agent's cash commission equal to 7% of the aggregate proceeds shall be reduced from 7%, I'm reading right here, to 3.5%, which is cut in half. So that's pretty significant. So what that actually means is Patriot One has put together, or well, at this point they've probably put it together already, kind of a list of firms, probably institutions, venture capitalists, whatever, and sort of financial institutions that either they think will be interested in an offering, or they already know for a fact, they've been kind of in talks, more likely that they are actually interested in an offering if Patriot One were to do an offering. And so anyone on that list, any firms on that list that they provide to Echelon, if any of those people on that list purchase any of these units, the commission drops from 7% on those specific sales down to 3.5%. So reducing that commission, cutting it in half, and those particular firms on that president's list actually get priority as well. Echelon has to ask them first if they want to purchase any of these units, and then go out and ask anybody else, or go on the public market, or however they think is the best way to do that. So that's nice, because probably if Patriot One has put together this list, it's companies that are already kind of interested in, and they will probably buy at least some of, I would say possibly a good chunk of this, the total $10 million worth of the units. And so we should see, I would imagine at least half of that. Again, this is just kind of me estimating. I'm not going off of any hard or any solid information here, solid evidence, but I would say a good amount will probably be purchased by the firms on that president's list, which should reduce the commission. Maybe Patriot One will get closer to 9.5 million or 9.6 million out of this deal. The other thing that it says on here is that the broker warrants, so the broker will get warrants as well. So Echelon should be provided with warrants as well, as kind of a supplemental payment. So that will add to some of the cost there. So we're probably looking at in the mid, somewhere just above 9 million actually in profit, if you will, from this offering for Patriot One. At the moment, that's about 3/4 worth of costs, right? 3/4 worth of cash burn. We'll see, depending on how many upfront sales maybe that they get, how many contracts or any other non-dilutive funding like they get from Raytheon, or things like that. That will, obviously offset some of those costs. But at the moment, we're looking at about 3/4 worth of cash burn from this offering. So that tells me that very likely Patriot One is pretty confident that within about, because they have 6 million right now. So if you add those total together, that's about a year, about 5 quarters worth. That tells me in about a year or so, they think they're going to be in a much better position to be able to raise money at a higher valuation. And so they're raising the 10 million now, be able to kind of get them to that next point where they think they'll be able to raise at a higher valuation, and then maybe they'll raise at a higher valuation. And maybe it's possible that they don't even have to raise at all. But I would imagine, again, just from what I'm seeing now, that they'll probably have to raise a little bit more down the road, especially if we continue to see, as we kind of saw in the spreadsheet that I've put together, especially if we continue to see cost of revenue outpacing revenue itself. We'll definitely keep an eye on that. I'll fill in the next quarters and we'll see kind of what the trend is, what it's looking like. But I would imagine they'll have to dip into a little bit more of that prospectus, but we'll just see. We'll see how it goes. And so that's kind of the main things that I wanted to cover on the offering. Just to recap, one, they're not using as much, they're not using the whole thing, which is good. And two, it's not actually going to dilute them by the entire $10 million amount. It's probably going to be a good amount less than that, because some of the money that is being raised is money that is for warrants. It's not for actual shares, which again could have a dilutive effect, but at a much higher share price later on down the road. So that's what I'll say on that. Now what I want to do is jump into the Kia announcement here. This is the first time that I'm looking at it, so you guys will be seeing it right along with me. One thing I will say again, guys, if you do have any questions, anything like that, put those in the chat. I don't see any at the moment, and the stream looks good, so it looks like it's continuing to update. But if you do have any questions, definitely put those in there. So let's take a look at this. And again, I'm just reading it along with you guys here. So announced that Kia Georgia has implemented the company's multi-sensor gateway technology designed to detect guns. The deployment of a larger service includes the company's artificial intelligence platform. Okay, so it says after evaluating a few options. Okay, so that's always good, right? They evaluated a few options as far as the technology, and they selected Patriot One after even looking at other competitors, so that's always a good sign. Because of its flexibility and innovative approach. So that's something to take note of. So the reason that they went, and again, I think even better was what I think Kyle Gunn was his name, the security operations officer at the Tachi Palace. That comment about going with Patriot One specifically for the ease of use, that to me was huge. But this is good as well, right? We're seeing them go with them because of their flexible approach to weapons detection. It fits well in what we want to achieve. According to not only does technology perform well in all weather conditions. Okay, that's good to see. That's something that actually I kind of was wondering about, but never actually heard much on. So the company or the technology performing well in all weather conditions, allowing them to use it outside. Definitely a must-have for any sort of security screening technology, right? It's most often going to be placed outside, so that's good. We can customize the look of the multi-sensor gateway, so the customizability, flexibility, visually appealing, blending into the natural aesthetics. I'm wondering if this is the manufacturer. If you guys remember, Peter was touching on a manufacturer that was going with Patriot One to cover the manufacturing plant, and then kind of that relationship spurred other talks with their suppliers who were located around them. So it'd be interesting to see if that is the case, but this could very well be that one. To detect knives without having to remove metals from pockets. Okay. Kia Georgia's facilities are state of the art. They wanted the same for their screening security technology. We're delivering the system, holistic service, multi-sensor gateway, with facility insights. Okay. So good to see that customers are actually finding value in that kind of update in or addition to their software, the facility insights. Again, we kind of saw an announcement on that several months ago when they introduced that. So good to see that companies are picking up on that and seeing that that's valuable. Security command center as well, so they can respond to threats, process lines with an innovative way, multi-sensor gateway. Okay. Looks like that is most of the press release there. So that's good. No numbers unless I missed it as far as like how many of the lanes they're actually implementing or anything like that. So we don't know specifically on that, but still, good to see. And the other good thing here is that this is outside of their current target area, right? Which means, from what Peter was saying, they're actually probably approaching Patriot One for this this contract, right? Patriot One really is only focusing its marketing and sales efforts, from what Peter is saying, on stadiums, casinos, arenas, things like that. At the moment, they're not really focusing on production facilities like this. So to see that they're actually getting one of these, and maybe this is the one that he's mentioned before, but that's good to see that they're even getting those contracts, even though they're not putting their full effort into marketing towards those contracts as well. Let me just check in the chat. We've got a few questions, or one question at least. When will your interview with Peter take place, Kevin? So that interview is tentatively scheduled for Monday. Obviously, as you can see, Peter's been pretty busy. They've just released a ton of new news. I'm sure he's got a lot going on, but tentatively for Monday, hopefully that will go through and probably be able to upload it pretty soon after. So Monday afternoon, probably after the market closes. So that is when that interview should take place. Again, if you have any questions that you want to add or would like me to ask, topics you want me to try to cover in that interview, join my Discord server, head into the PTOTF or Patriot One Technologies channel in that server, and you can join that discussion there, add your questions there. Big facility, 2,200 acres, 2,700 employees, 34. Okay, yeah, so thanks for that information, Jonan. I apologize if I pronounce any of you guys' names incorrectly, by the way. So that is pretty big. So that should actually, if the facility is 2,200 acres, that kind of gives us an idea of maybe how many lanes. It's obviously not just going to be one to cover that large of an area. So probably looking at multiple sales of the multi-sensor gateway for this specific one, maybe starting in one area of the facility and looking to expand into the rest of the operations if it works well. Again, don't know if this is specifically the the one that he was talking about. Maybe I'll go after the stream is over and take a look at the satellite view and see if kind of it's a general industrial area. Maybe there's some suppliers around there. Kind of get a little bit more context as far as maybe this is the one that he's talking about. On it, to be honest, it'd be better if it wasn't, right? Because that means there's another one as well. But I would probably imagine it is. Let me just double check and refresh their documents page just to see if any more news hasn't come out, because it seems like this news is coming out like by the minute here. Oh, and there is another news release. Let's take a look at what it is. You guys are seeing this live with me. By the way, if you guys haven't subscribed, I definitely would appreciate it if you guys subscribe to the channel. I know a lot of you guys who watch these videos on Patriot One aren't subscribed. You get a lot of the, information from the Facebook groups and stuff like that. The videos are posted on there, which is totally fine. But if you guys do want to support the channel, that would be great as well. Okay. So this news release is actually just the Kia announcement as well. So not really anything new here. It looks like the same exact news release. Yeah. Okay. So same one. So I think this is, for the most part, most of what I wanted to cover. If you guys have any last minute questions, you can get them in there. But we should also, so guys, keep an eye out. I'll definitely be looking for a supplement prospectus. So if we go back into here for, where is, so if we go to, where is it? Somewhere in here it says that, okay, right up here actually in the kind of the italicized font above. So a final base shelf prospectus containing the relevant information has been filed, etc. This document does not provide the full disclosure of material facts relating to the securities offered. Investors should read the final base shelf prospectus and any amendment to the final base shelf prospectus, any applicable shelf prospectus, so prospectus supplement for the disclosure. So there should be filed pretty soon, maybe later today or later on tomorrow. There should be a prospectus supplement that is filed that should give us a little bit more information, maybe how many warrants are in, maybe the strike price of the warrants, because that could give us an idea of how much the warrants are going to cost. Generally, kind of like a call option, the closer that the exercise price is to the current share price, the more it's going to cost, because the more likely it'll actually get there, right? The farther the strike price is, or the exercise price is, from the current share price, the less it's going to cost, because the less likely it gets there. Now, there's pros and cons to each of that, because the further out the exercise price, right, then we're now, diluting less or getting more money for the dilution, in other words, because potentially the share price is higher that we're seeing the actual dilution. But we're getting more money up front, or the company is getting more money up front if the strike price or the exercise price is closer, because the warrants are probably going to cost more. So just depends on how they want to structure that. But you guys should keep an eye out for that, because that should be coming pretty soon. But I think for the most part, that is most of what I wanted to cover. I appreciate you guys for tuning in to listen. Definitely thank you guys for supporting the channel, all of you guys who are subscribers and have been subscribers. Thank you for all of your support. I really appreciate it. I will be doing again an interview with Peter hopefully on Monday. We'll have that out, and if there's any new information that comes out over the next day or two, I'll definitely jump on and do a video about that as well. So anyway, thank you guys for tuning in. I will see you guys next time, and have a great day, everybody.